Hello, traders. It is 8:02 a.m. Chicago time on Wednesday, the 9th of June, 2021. It is episode number 2010 today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, starting out with the pre-market summary sheet here, we see that the market's really mixed currently. We're hanging on to the all-time highs. The overnight point of control in the S&Ps is around the 42.26 area, which has a lot of action. Friday, we closed at 42.26. Monday, we closed at 42.26. Yesterday, we closed at 42.25.75. So you could see that this 26 area was also the overnight point of control yesterday, as it is today. Today it's at 42.26.75. So I'm going to be saying that number a lot. The market has reached absolute and complete nirvana at these prices. And so that's where we stand. It makes for, although yesterday had a fair amount of rotations in it, makes for a pretty boring trade and a kind of a jolting start to the summer, if you will. The current market condition is mixed based on this snapshot that was taken at 8:50 a.m. This morning Eastern time. You can see that the S&P is up a little bit, and so are the other indices. The German DAX is down, but overall the average across the board is plus 0.02% or something like that. It's relatively mixed. That with the treasuries, the 10-year note, the 30-year, and the Bund higher, gold, silver higher. There's also an allocation to safety at the same time. Of course, the NASDAQ behaving differently because of this quite large bill that passed the Senate overwhelmingly 68-32 for around $250 billion for direct investment in semiconductors, networking entities, research, and so on. And that is a key element to what the NASDAQ is composed of. So the NASDAQ saw a nice push up yesterday into the close, although the S&P had no interest in joining, and it's pushed higher, although it's sold off. It sold off on the open yesterday in the NASDAQ. It pushed up pre-open and has come back this morning. So the NASDAQ's a little bit higher. But that's a big piece of news there, that legislation passing and that much money being spent with both parties voting for it with no argument whatsoever from either party. That's a great thing. U.S. inflation data tomorrow, very important for the markets. We get core inflation, we get overall inflation year on year, and we have to pay attention to this number. Last month, remember, this number came out as a surprise, came in at 4.2%. The market sold off and ran up. Well, we're about to get this number again for the month of May tomorrow, so the market's likely going to pay particular attention to it. So inflation data is in play. We're likely to get Fed speakers as a result. Today we have wholesale inventories at 10. We have crude oil inventories at 10:30 Eastern and a 10-year note auction at 1. The S&P has traded 142,000 contracts currently. The overnight inventory is 75% long. 75% long on what is a relatively tight overnight session, 12.75 points. It's really back to the pre-pandemic overnight range is what we have here. Point of control again at 42.2675. Cryptos are getting a little bit of support after getting hammered a couple of days ago, and we're seeing them coming back up. Pretty interesting trading going on there. So that's that. That's the overall picture. Looking at yesterday's action, yesterday we were opening in a gap at all-time highs. The expectation was for responsive selling at the open. Was looking for it to respond back to 42.26 or so, 42.27, and then I was really looking for a rally towards the 40.50, and then potentially a push into 56. Did not see that at all. The secondary is a push higher that is likely to fail in the 40 region for a drop back into the 26. Again, that number, the 26, that did not happen either. So both scenarios did not work out. The third scenario, if you recall, is a push of the overnight high and then an open test drive lower. And I talked about 4204 right here being the key price. I didn't draw that scenario. You have it in the video from yesterday, but that's basically what took place. So let's move into our review segment and take a look at what has happened. So this is the action over the last 3 days. These are RTH. This is RTH only, or pit session only. And you could see that that we've had these pretty relatively tight days. If we go and standardize this to three pixels per bar, we can see what kind of action we've had here over the last couple of days relative to the past. Pretty tight Friday, pretty tight Monday, and yesterday we had pretty decent rotations. Again, this is a four-tick Renko chart. It's not a time-based chart, so there may be more bars or less bars depending on how many rotations and how volatile the market had been. And yesterday shows, given the range, yesterday basically has the same number of bars for the pit session as Friday and Monday did together, but still compared to Thursday, we have a relatively dull market. But we did respond right away from 35. We had an immediate response down. We opened at 34, went up 4 ticks. We had an immediate response down, pushing into the 30.50. We had a nice little consolidation here, which actually set up a long for me at 30, set up a long at 30, went to 32, and it got stopped out at 27 down here, ahead of the 26 close, and then it ran from there. And then from there, the opportunities really were to the short side to target 42.04, and we missed that by 7 ticks. Missed the 42.04 by 7 ticks, but what we did is we hit the gap mid. So if I turn on the master levels here, you could see that the gap mid from the non-farm payroll release on Friday is exactly 42.0575, which is the low here. And so we went to the gap mid. We held. We bounced up. We see a higher low, and then it starts working itself back into the prior day's range. The next opportunity is along in the 15 even area, back to the initial balance, and so on and so forth. 42.18. But I didn't take that trade. Yesterday overall was a losing day for me. Losing days happen. Excuse me. Losing days come and go. And it's just part, it's not something that I'm embarrassed to talk about. It's not a failure on my part. I took the trades that I saw. The afternoon brought this kind of support at the zipper here. And the expectation for those of you who are at Convergent Trading and listen to the Trade Talk, we talked about the probability of taking out this 35%. The historical probability is around 33%, given the latest market stats report on 768 days of samples. and the market ended up holding that stat. In other words, there's a 66% historical probability that the 35 would not be broken by the end of the session, and that held true. But what did we do yesterday? We dropped beneath what is, and I'll show you this, what is a balance zone. So you could see that if I turn on this composite, which I'll overlay, you could see that once we put up this composite, actually let me make it a little bit fatter. So since the gap up, so we have a new micro, excuse me, a new micro composite here. And since Friday's gap up, once we have a gap up and the market runs and it comes back on itself like it did on Monday, that starts a composite. By definition, we have an imbalance that's turning into a balance, so we look at a composite. So if we look at the progression from Friday's auction, let's bring this back to Monday's close. So look at this profile. We have a very clear double distribution here with a break right at the 23 to 24 area. I talked about this on Tuesday. But as we move forward and you look at how this composite's forming and where the volume's going, you'll start to see that the distribution of volume is still respecting that double distribution, but it's filling in. So we still have a gap open. We extended down. We have a bit of an excess on the low, and we have a point of control up here in the 28 area. But overall, we still have this low volume node 4223 from last Friday that didn't quite fill in Monday or Tuesday, and we're stuck in this double distribution. So in this composite. So yesterday, we have a value area, which is this kind of bluish cyan color, and we finished right in the middle of it with a point of control right in the middle of it. And overall, the market was completely imbalanced yesterday after testing lower. So again, yet again, we have a situation where the market tests down. The market tested above. The market tested down below the non-farm payroll day and finished in the upper distribution, is not letting go of all-time highs. So yet again, we're coming in here with the idea that we are not finding an excess on the high. We're not finding sellers up there. And remember, the market will keep advertising higher and higher prices until it finds sellers, and then we'll have 1.5% selling day, and then a failure to come back to those prices would then trigger off a stance where we start to now look at the short side more seriously, or as seriously as we do the long side, and we're looking for failure to come back. And what this market has shown is it's consistently coming back. It's not failing to stay away, to come back to these all-time highs, and it sees them. Therefore, it sees them as value. So as we move into the composite here, we could see that, as I talked about last week, tested above and below the prior week, the last week of May. So last week, the first week of June, tested above and below the week of May, put in another point of control in the 4204 area, and that's why it was a target yesterday. And then yesterday, so if I zoom in here, yesterday what we did is we took Friday's non-farm payroll, and we had an inside day on Monday. Then we had an outside day yesterday, but look at what it did. It basically tested below Friday's low into the gap and came all the way back through and finished at 42.26. This is an excess low, and we had this excess low on Monday, and we had it again on Tuesday, and it's right back here at the top. This is likely to move now to the measured move target of 40.50, and it's likely to continue higher. Why? Because we are just not letting go of these prices up here. If the market is too expensive, remember the market's purpose, you really have to, this has to be part of your trader DNA. Trader DNA, an overused term in our business. It has to be a part of your trader DNA that the market is an auction and its purpose is to keep advertising and trading higher until it finds the sellers, then trading lower until it finds the buyers, and then finding that price in between to facilitate as much trading as possible. The goal of the market is to get as many buyers and sellers to meet at a price, and that price is defined by the aggression from both sides and what they're willing to accept as value. And that's the whole basis. And then from there, you can layer on your fibs and your moving averages and whatever else you want to use, moon cycles, whatever else you want to use. But at the core of it, what makes the market move is a perception that the current price is likely to the value of this product is likely different than where it is now, and therefore I'm going to take a position until the market goes to that value price, and then I'm going to exit that position. So if hundreds of thousands or millions of people do that, you have a market that looks like what we have here. So on that basis, having tested below Monday, having tested below Friday, it has come all the way back and has created an excess at the low, a V bottom basically, and is back at the high. To me, 4240 is on deck. We have the inflation numbers tomorrow, and there's not much today that might cause volatility. So I'm expecting another slow day, and we're opening on the edge of value today, and we have to come into today's session knowing that and accepting that this is where we are. So since yesterday, we closed, we opened, we went absolutely and completely sideways in the Asian session. The Europeans came in here at 1 a.m. my time, Chicago time, and they continued to go sideways. And then we finally started to see some lifting into the current high, 42.34 1/4, the overnight high. Yesterday's high is 36.75. So this is the overnight session is an inside session. It's completely balanced. You could tell the profile is totally balanced here with a point of control, 42.26 again, telling us further that it's completely balanced. The delta is basically at zero. It's plus 236. This is likely to be a very choppy open. That's what we take away from this information. So that's what we have. Looking at the order flow, looking at Edge Pro X, we see that essentially, again, we have a market that is not giving us much to work with in terms of resting orders, telegraphed orders. 42.15 has some size on it below, and then above, it's really, again, back to that 42.50. The mid-century figure still has the large size. I showed this yesterday. Same size as resting up there. This is the rhythmic feed on Edge Pro X. You can get this at edgeprox.com. This platform, this is my main trading platform. Looking across the board, sideways market on the footprint. So far, the cumulative delta with the relative delta underneath it. A little bit of very large lot buying, but overall pretty flat cumulative delta, as you can see here, plus 153. I actually trust the rhythmic data more than I do the IQ feed data because of the MBO capabilities. You can see the market has shifted up from Friday and has sat sideways with the point of control kind of sitting, the point of control being these dark red lines, the point of control kind of sitting sideways here, day in, day out. Again, we're opening right in balance here. And this is where we are. So with it be holding on to the all-time high, with it holding on to 42.26 as a balance point, with the delta being flat, please understand that we're it could move on the open. I will never promise you that I know what's going to happen. We don't know what's going to happen. We don't know who has to adjust their books ahead of inflation or whatever tomorrow. For whatever reason, a participant can change the entire plan. But the fact is, where we're opening here, it's pretty freaking balanced up against all-time highs. So overall, we're not doing much. Look at the market profile chart. There's value, and there's value. It's right stacked on top of each other. Again, these are the last 3 days here, Tuesday, Monday, and Friday. Again, another indication that we're not going anywhere, even if we use time-based profile. Let's move into what's expected for today. I'm going to let you go. I know this is a long one, but I just want you to make sure you understand the narrative coming into today so you can set your expectations accordingly. When the market's in balance and we expect chop coming in, it doesn't mean that we don't have a trade, okay? That doesn't mean we don't have a trade, because we can trade from the outside in. So you can see a lot of people online who share what they're doing. Several names come to mind, and you'll see that very often they'll trade from the outside in. That means the market is dropping, whether it's an equity or a future or whatever, the market's dropping, and you have to have a big account to do this. You're accumulating a position and you're expecting the market to move back to where it came from. That's called outside in trading. You're trading the outside and imbalance to the outside, and it's a mean reversion back towards the middle. This is when the market's in balance. This is what we're looking at, right? This is what we would expect. That was the second scenario, a push up and then coming back into line. And then inside out trading is when it's consolidating in the middle and it's coming into an apex, and we're going to take a trade on the inside looking for it to go out. In other words, we're expecting it to trend or to go into imbalance. Until the market states otherwise, we assume outside in. We assume the market is going to continue to find equilibrium, because statistically speaking, and past performance is not necessarily indicative of future results. Statistically speaking, the market only trends somewhere between 18 and 23% historically. So it spends a lot of time reverting back. Again, that's a historical figure. It doesn't mean that it'll always do this, but that's a pretty high probability, 75 to 82%, something like that, historically speaking, where it will revert back and come back into these fat areas that you see on the profile here, what we call balance. And that's what we're seeing over these last couple of days, is the market just kind of reverting back to these prices and regurgitating prices. We used to do this down at 41.83 to 85, down to 75. We did it down at 40.20 to 40.30, and there 41.55 is another one. These are balance areas. So right now we're forming balance at 42.26. There's that number again. The secondary scenario, or the primary scenario today, open auction in range, out of value, an attempt higher to squeeze the overnight high, get us the overnight high stat. I'm expecting it to fail back in, consolidate in here, set up a base, and then eventually later on start to push towards the 40.50. My expectations, as I said, are not very high for a market that is likely to be volatile, but I'm looking for this 40.40 to be tested, this next key area, the measured move, and then above there, remember that size in the Edge Pro X heat map at 40.50, that 670 lot is resting up here, likely to attract the market. But overall, I'm expecting a quick test up, a choppy open, a quick test up, fall back in, consolidate, and then later in the session, like we saw yesterday, start to move towards the highs. The secondary open auction that pulls back into the 42.26, consolidate, give up a little bit of room, come back in, consolidate into the middle, and then essentially continue the same path as scenario one. Again, we have soundly rejected Friday's low and Monday's low yesterday. So the skew is the bias, or the skew is to the long side. It's just a question of how deep does it want to go to find those buyers to fuel the next move long. I don't want to completely color your bias, but those are the likely scenarios. I'm out of time. It's 8:27 here in Chicago. Good luck today, and I'll catch you tomorrow morning. Take care.